Good morning, everyone. Once again, welcome to the webinar on de-risking the transition, aligning Ghana's private sector with the nationally determined contributions and green intermediary capital. Once again, my name is Rhoda Boateng. I'm the program manager of the UN Global Compact Network Ghana, and it's my pleasure to host today's session. And we will begin with a quick overview of our agenda. So today we would have opening remarks from the Executive Director of the UN Global Compact Network Ghana, Tolu Lacroix, and then we would have two presentations, one on overcoming technical gaps and circular economy bottlenecks, global standards by Mr. Isaac Batini of the Association of Ghana Industries Energy Service Center, and another presentation on commercial green underwriting and navigating due diligence by Madam Eva Hakweku of Consolidated Bank Ghana. From there, we would have an open floor where we take questions from our participants and throw it to our speakers to give some feedback on them. And then we'll conclude with a call to action and next steps. Throughout the session, if you have any questions, please feel free to drop them in the chat and we'll address them during our Q&A session. So to kick off, I would like to invite the Executive Director of the UN Global Compact, Mr. Tolu Lacroix, to give us the opening remarks for today's session. Over to you, Tolu.
Thank you, Rhoda. Distinguished ladies and gentlemen, valued network members and partners across the Ghanaian private sector, representatives of the NIDA, good morning and a very warm welcome to today's webinar on de-risking the transition. We gather at a pivotal moment as Ghana accelerates its commitments under the National Determined Contributions. Sustainability has been moved from the periphery of corporate strategy to the very center of commercial survival. Integrating ESG compliance and circular economy principles is no longer simply about doing good. It has become a prerequisite for unlocking green intermediary capital and securing market access as investors continue to screen for new opportunities that reflect the commitments of the Paris Agreement. Our objective today is a practical one: to examine how we de-risk this transition on both sides of the market. On the demand side, our industrial and corporate firms face the hard work of restructuring operations, closing technical capacity gaps, and overcoming circular economy bottlenecks to build genuine climate resistance. On the supply side, our financial institutions stand ready to deploy green capital, but projects must first withstand rigorous sustainable underwriting and environmental due diligence to access those credit lines. Today, we set out to bridge that gap so that our firms can invest in the transition that will bring the impact we are looking for today and set the standard for industry going forward. I would like to express our profound gratitude to our partners at Association of Ghana Industries, Energy Service Center, and Consolidated Bank Ghana for their leadership and steadfast collaboration in making this masterclass possible. I am confident that their contributions will bear tremendous fruit for the participants in this session this morning. I thank you all for committing your time this morning to this very important program, and I look forward to an insightful and productive session. Thank you. Over to you, Rhoda.
Thank you so much, Tolu. So we'll dive right into our presentation on the demand side on the topic overcoming technical gaps and circular economy bottlenecks. And we have our first speaker being Mr. Isaac Batini. He is the Chief Technical Officer of the AGI Energy Service Center. He's an experienced sustainable energy and climate professional with nearly a decade of expertise in renewable energy, energy efficiency, industrial decarbonization, and climate action. He currently leads programs that help businesses improve energy performance, reduce greenhouse gas emissions, and transition to low carbon operations. I would like to welcome Isaac to take over. Isaac, over to you.
Thank you, Rhoda. Can you confirm that you could hear me?
Yes, Isaac, I can hear you loud and clear.
Thank you. Let me just give me a minute. Let me share my screen. Can you see the presentation? Is my presentation visible now?
It is.
Right, thank you. And good morning, distinguished ladies and gentlemen. So my task here is to discuss through the topic, the demand side, overcoming technical gaps and circular economy. The overall theme of this webinar is on de-risking the transition, aligning Ghana's private sector with the NDCs and green intermediary capital. So I will take the demand side. This is just a structure of my presentation, just about 5 items. I'll basically take a minute to talk about the demand side dynamics, the transition challenge, bridging the technical gap, the role of the AGI Energy Service Center, and then the practical solutions that we are implementing in industry. On that note, let me just dive straight into it. So, yes, the topic is on the demand side. Well, in the context of the green transition or the climate transition, energy transition, what do we basically mean by the demand side? In this context, the demand side are basically the organizations that are the ones at the demand side, or I'm using the term already, again, forgive me. They are the ones requiring the consumption of energy. They are the ones requiring the consumption of resources, exploitation of resources, and all of that. So the demand side basically spans several sectors. You could see them listed on the screen. We have the manufacturing industries. Basically, they consume a lot of energy. In fact, for manufacturing industries, energy consists closely between 25 to 40% of their production costs. And that's a huge percentage. It means that there will be need for a lot of energy generation. The demand side also includes the SMEs. It includes commercial buildings, agribusinesses, service industries, the banks, all the service industries. They are also part of the demand side because they all consume resources, water, they generate waste, and all of that. So basically, when we talk about the demand side in terms of the green transition, we basically mean these industries. So going forward, I'll just be referring to it as industries. Now, industry globally currently is facing a triple challenge. And what are these challenges? One has to do with the rising energy costs. I don't have to belabor this point. I think we are all living witnesses to it. We know the geopolitical tensions ongoing in the Middle East in terms of the Strait of Hormuz, the price of crude. Of course, so with this comes, pressure on energy generation or electricity generation. So what are we seeing? I think even for this quarter, there has been some slight increase in the electricity tariffs. All of this affects operational costs for industries, which also means that they have to look for alternative and efficient energy solutions because the key interest of business is to maximize profit and reduce to the bare minimum the cost of operations. That is one of the challenges in terms of rising energy costs globally. The second one is the changing global market expectations. We are witnesses to it again that about 20, 30 years ago, the conversation around ESG, sustainability, and all of that was in its very nascent stage of phase. But currently, we are entering into a phase where there's growing ESG requirements and sustainability demands on industry. There's demand for low carbon supply chains. So when you take other markets, let's take the EU, for instance, as a collective market, they have come up with the EU Green Deal, trying to transition all their economy to net zero by 2030, well, 2050, by half of the mid-century and all of that. And all of these, they are putting in place measures to decarbonize, as in reduce emissions along the supply chain of businesses. And all of these even have pressure on businesses that are even in the third world, such as Africa and our part of the world. So that's also one of the market expectations that are changing. The last one on that is the export competitiveness considerations. In fact, currently, issues around sustainability and ESG and all of that they are becoming they are creating a competitive edge for businesses. So businesses are being challenged, they are being pushed to implement a lot more of this in order to distinguish themselves and also become competitive in the market. Because we all know that if you are a business, you are not just operating or competing with your businesses in your subsector or in your country, but you're also competing with businesses globally. So it means that you have to adopt these strategies to be competitive. The last challenge that businesses are facing is the resource efficiency challenge. Of course, we know that I mentioned already the rising energy costs, which means that there is increasing demand on your business to be conscious about your energy use. So you must make sure that you are, if you are in an energy intensive sector, such as the cement, steel, and all of that, there is global pressure on them to reduce their energy use. Of course, in terms of waste generation, industry generates a lot of waste as part of the production process. And there is increasing demand on them to see to proper disposal and reuse, or giving a new life to this waste. So that is a whole concept of the circular economy, where one waste from an industry will become an input into another industry. So all of these are growing demands on industry. Now, with this triple challenge that industries are facing globally, through our work here, we have identified that, of course, there are some gaps that industries are facing currently, especially in our part of the world, especially in Ghana. And we just classify them into 6. The first one is the energy visibility. So AGI does the quarterly business barometer, where it's a survey. We try to just test the pulse of industry on macroeconomic issues, including energy and all of that. And of course, over and over, one of the key challenges, it always features in the top 5, has been the cost of electricity, sometimes the cost of energy generally, including fuel and all of that. But of course, it means that the industries are conscious about the cost, because that has direct effect on their cost of production. But when it comes to identifying where the energy, identifying where the steps that they could take to reduce, identify energy wastage areas in their company, or what basically they could do to improve on their energy use, we see that a lot of industries are lacking in that area. So they are not able to undertake this preliminary audits and all of that. That's one of the gaps. The second one is the assessment. So we also found out that a lot of them, even though they complain about the energy, the cost, they have not undertaken any formal energy audit or feasibility on it. Some also do not keep proper data on their energy costs, basically, because if you are keeping proper records, that will give you a clue as to where a lot of your money is going, and also do these calculations. The third gap we identify is that most of these industries, especially SMEs, I should say, are not, they lack expertise or in-house capacity to develop, proper projects that will properly qualify for green financing. And that brings us the fourth gap, which is the internal capacity gap. So those, they go hand in hand, the internal capacity and the project definition. They are also not able to properly quantify the emissions that they are producing and all of that, and also do not know the availability of the advisory support. If they, for some of them that want to undertake these activities, they would want to go and engage the service providers directly. They are not aware of the presence of the advisory firms, such as the AG Energy Service Center. So these are just some gaps we have identified over the course of the last 6 or so years. Now, with these gaps, in 2019, the Association of Ghana Industries, which is one of the oldest industry associations in Ghana, I mean, just a year younger than Ghana, we formed the Energy Service Center. Now, the Energy Service Center was established to support industries across these 5 thematic areas. So I'll just take you briefly through them. And basically, we describe ourselves as an honest broker. We are not here to push any particular brand. We are pushing the concept of energy efficiency. We are pushing the concept of climate transition. We are pushing the concept of sustainability, ESG, and all of that, and not pushing any particular business. So what are the things that we do? We basically provide a platform for orientation, news, and technical information across these thematic areas: energy efficiency, renewable energy, ESG, sustainability, and all of that. So we are consciously always orienting industries at any AGI event at all. We provide training and capacity building service for industries. Since 2019, we have been organizing a lot of training programs. We have trained thousands of staff, actually, across various topics: energy audits, solar feasibility, carbon accounting, decarbonization, and yeah, you name them. So we'll come to our website and then you could go and check those there. So we provide those services, but we also provide independent technical support to industries in terms of feasibility support for their solar, biogas, or any of the green projects that they want to undertake. We also support them in terms of the energy management system implementation. So the ISO 50001 energy management system is a global standard for how to manage energy, especially for energy intensive industries. We support industries in implementing and setting up the structures for implementing their ENMS in their company. We also help them to basically through the whole project development phase, where we support them with transaction advisory services and also become their owner's engineer in terms of the project. We supervise the project and ensure quality of the project. Lastly, also, very importantly, because Eva will be talking about the finance side very shortly, we also advise the companies in terms of the financing options for their green projects. So we give that technical advice as to the financing available on the market, whether they intend to finance the project through on their own books or through a credit facility from a bank, or in terms of solar and renewable energy, there are lease to own models and all of that. So based on the demand and the particular expectation of the company in question, we give advice on that. Now, the technical gap that we have, the 6 gaps that we have identified there, what is basically the solution that we have been deploying here at the AG Energy Service Center? So they are just 4. The first is to help the companies to assess where they are. So we help them assess the energy consumption, determine the cost, the emissions, the resource use, waste generation, operational inefficiency. So our services are basically tailored towards supporting the industries to, first of all, assess. That's where I talked about the energy audits that we do for companies. We have done energy audits for currently more than 150 companies since 2019. And also currently also supporting some industries in terms of carbon accounting, helping them to account for their emissions and set up strategies to decarbonize. The second strategy is to help the industries to identify the most suitable opportunities. So the energy audit support and the solar feasibility and this support, technical support that we give to the companies, we don't just stop at the assessment phase. We also help them. The report that we give them will help them to identify the most suitable opportunities. So in terms of energy efficiency, we give them recommendations or measures that are classified along four means. We have the zero CAPEX recommendations. We have the low CAPEX recommendation. We have the medium CAPEX recommendation and the high CAPEX recommendation. And all of these come with their own payback time and all of that. In terms of renewable energy also, we are able to properly quantify the project's payback period and everything for them, and also advise them that they want to identify cleaner sources of emissions. We help them also. Now, the third phase is to help them develop, turn the project into viable, this opportunity into viable projects. So what do? We help them through the transaction advisory phase, where after the report, we help them to develop the bill of quantity, put out a tender, call for expression of interest from the suppliers, that is the technical suppliers, not the financial suppliers. And they put in a bid, and then we advise the industry to select the particular company that meets the specification of the particular service. And after that, we become their owner's engineer, where we are supervising the work, giving advice in terms of the standards, the specifications that they should, of the product that they should use, and all of that. We do that. So that is the technology adoption, the process improvement. We also, after the installation, we also come in and do some capacity building or training program for the industries. Now, I'll just quickly move to some of the practical solutions that we have been deploying. I've spoken generally about them, the things we do, but let me just list some 3 here. So the very first one I would like to highlight, and this one we are almost ending it. It's coming to an end just in a month's time. So this was a partnership with the World Bank a year ago, where we are supporting 35 businesses, basically to become efficient in their energy use. So we are providing free energy audit for the businesses. We give them a custom energy savings plan. provide training for them in terms of energy management system and implementation and all other training. We give training to them as part of this package. And then recognition. So that recognition part is coming up. That will be for those that are implementing the measures that have been given to them. Now, this partnership with the World Bank was a pilot project. The idea is to pilot it and see the feedback, and then we'll scale it up based on the results. So just want to give highlights of this. For this, we are not calling for any new applications currently. Now, the next one, which is BISA Connect, and as you can see on the screen, this one has to do with renewable energy support. So this is, we are trying to get SMEs to be investment ready. To become investment ready, they must take the initial step of getting the feasibility and the assessments done. So we are just trying to incentivize that phase by giving a 60% discount. And this project is actually in conjunction with Swiss Contact, which is a Swiss private sector organization. We are working with them to give 60% discount on the cost of feasibility, solar feasibility assessment for SMEs, businesses currently. So that this one is currently open. We are actively calling for interest from businesses, SMEs, to apply. They get a 60% discount on the cost of the feasibility. But it doesn't end here in terms of just the feasibility. When we finish with the feasibility, the project will be uploaded onto a platform. So let me talk briefly about the platform. We are developing a platform to link the demand side that our members, so the industries, SMEs that are requiring services, they will be visiting that site and they will do the feasibility assessment for them. But more importantly, we'll have the supply side also there, the suppliers, the solar companies, the energy audit advisory firms. We also have the financial companies there. So there will be a list of the banks, the financial institutions, and the packages that they have. And that will come at the third phase where the companies can select which institution they want to have an engagement with and then go and have a financial close on the transaction. So this one is in partnership with Swiss Contact. It's currently actively rolling out. It's for 3 years. So interested businesses could contact us and they will be able to apply. Now, the third one is on this was just launched about a month ago. And this project we are calling Sustainable African Value Chain Initiative. It's also a 3-year program. It's in partnership with the Confederation of Danish Industry, our counterpart in Denmark. So what are we trying to do or achieve with this? I spoke about the triple challenge, the ESG pressures on businesses. This project is basically trying to respond or answer that question. We are supporting companies across 5 thematic areas under this project. The very first one is on ESG compliance. Now, beneficiary companies here will be supported with technical capacity building. So there'll be training programs that they will attend, and then backstopping. So experts will help them to put up develop an ESG strategy, as in they will do a materiality assessment of their company, see which matters are very relevant to them. And they will put up a strategy and also a report, an ESG report, an initial report. Once it's approved, then they will develop, with the support of the experts, an ESG strategy for their company. Now, this is all for businesses that are, getting pressures from their suppliers to, come up with these ESG reports. There is also the second area of water. So we are supporting water, high water use companies to be efficient in the water usage. So this support also comes with the technical capacity building. It also comes with the backstopping, expert backstopping for them to one, identify areas for water inefficiency, put up a water report, and then a water management report. The third is on decarbonization, and that's where they will also have training and backstopping in terms of their emissions footprint. So help them to account for their emissions as a business. They will put up an emissions inventory report, and more importantly, help them to come up with a decarbonization strategy as a business. How do they want to do their emission footprint? What are the things they want to do? The fourth is on EUDR compliance. That's the EU Deforestation Regulation compliance. That is applies to industries or SMEs or companies that are mostly in the cocoa sector, the forestry sector, and all of that. So it's kind of a niche one. Those that are affected by that, we are also supporting them to be compliant to the EUDR regulation of the EU. And the very last one, which is cross-cutting, is the value chain management. So most SMEs, as we might imagine, in our part of the world, fall part of the value chain or supply chain of companies outside. So there are pressures from these companies for our industries to reduce their emissions footprint. So this support is basically going to help them to one, come up with their materiality assessment, what is typical for their business, and then solutions for that. Is typically these 5 areas, the support will last for 6 months. So we take an industry for 6 months, and then we help you through the whole value chain. Now, very lastly, this is also a new concept. We introduced this 2 years ago in Ghana, which is the concept of the energy efficiency network. So we launched the very first, Ghana's first energy efficiency network for industries 2 years ago, or 3 years, 2023, in partnership with GIZ. So what is the idea, the whole concept of energy efficiency network? The whole idea is to provide a platform for industries to have peer-to-peer learning and networking and exchange of ideas and all of that. Now, as you can see on the screen, these are very big industries, and these were the industries we had in the very first network. Each network lasts for 2 years, so we supported these industries for 2 years. We did energy audits for them. We did training for their staff in terms of energy management and all of that, help them with implementation throughout the 2 years phase. You can see the company, Takrady Flour Mill, Mini Plus, Atlantic Life Science, Amanex, Ryder Steel, Crocodile Machete, B5 Plus, Quali Plus, West African Mills, Temaloop Oil, Promasidor, Flour Mills of Ghana. Based on the success of this first network, we are rolling out a second network. Currently, the call is out for, and we are reaching out to industries to rope them in on the second network. So I spoke about the structure of the EN already. Let me just go through. So we are targeting 15 companies for the next network. As I mentioned already, the focus or the duration is 2 years. And what are the key benefits for these industries? Now, the very first network, we supported them with energy audits to identify where they are wasting energy and all of that. So the measures that we give them, if they implement, and we have had practical results from that network, where Crocodile Machete was sharing testimony of even more than 30% reduction in their energy use by implementing an energy management system. So this network, can help businesses to achieve between 5 to 30%. We are putting that there because, yeah, the zero cost and then the medium cost, they basically bring in a certain range of energy savings. Of course, they also will help them to achieve lower their overall energy cost and also reduce their greenhouse emissions, because once you are reducing your energy usage, it means it translates into a reduction in your emissions. And also, more importantly, for this second network, we are introducing the concept of the GAG accounting and reporting. So we want to add that as an extra service to help the company. So it is not just helping them with energy management system implementation, but we'll top it up to also train them to account for their emissions and come up with a decarbonization roadmap or strategy. Now, the network also promotes, I mentioned that already, peer learning and technical support among the business, because we form a platform and they exchange ideas. These are technical staff of the industries, exchange ideas of best practice among each other. As I mentioned, the call for this is very actively open, and interested industries or SMEs could reach out to the AG Energy Service Center onboard you. Now, just by way of concluding, I know my time is up. My whole presentation this morning is along this three line, that we have to make sure that the businesses get a foundation first before the finance, because of course the money is there. I'm sure Eva will mention there's a lot of money, capital around, but the businesses have to be technically ready. You know, if they are not ready, the projects will not be bankable. I mean, the institutions will not be able to invest or support them. So we are filling that gap, trying to get the SMEs with the technical readiness, and which also means that's an extra thing, the business case development. We also help them to structure their support. So most of these businesses do not really know how to go around developing these green businesses. So our support will enable them to basically quantify the cost associated with the project, the savings, the payback. So we do all of this as part of the technical support that we give them. And with this report in hand, they could walk to a financial institution or a firm to get financing for the project. And the last one is the lender alignment. So we also provide that technical advice, trying to link them to the financiers available in the market. So in a nutshell, basically that is it, that we are filling the whole of technical readiness for the SMEs, trying to get them ready for financing for green investment financing. On that note, thank you all very much, and I guess I would wait for question time. If there are any questions, I would be glad to answer. Thank you.
Thank you so much, Isaac, for that detailed overview of the work that the Energy Service Center is doing to support businesses, and for also providing the practical solutions on reducing energy costs and then boosting energy efficiency. I believe participants have taken notes of the various opportunities that abound, and will definitely be engaging with you to take advantage of some of these. Feel free to drop any links you have in the chat. I see some questions. We will take them during our open forum. I would like us to move on to our next presentation. Share my screen. Okay, so our next presentation is on commercial green underwriting and navigating due diligence. And this will be handled by Madam Eva Akwaku, who is the head of Sustainable Financing and Impact at Consolidated Bank Ghana. Eva has over 19 years banking experience across sustainable finance, risk, internal control, branch operations, corporate communications, and corporate social responsibility. Currently, Madam Eva leads the development and implementation of CBG Sustainable Financing Strategy and oversees the origination and structuring of green, social, and sustainability-linked financing opportunities. We are very honored to have you today sharing your expertise. Over to you, Eva.
Okay, so thank you so much, Rhoda. Rhoda, please, can you see me? I hope my camera is not messing up once again. Can you see me?
Not yet, but let me
Okay,
check.
okay, so let me share my screen so that we can just start the presentation. Okay. Rhoda, can you see my screen?
Yes, I can. Please
Okay,
proceed.
great. Okay, thank you so much. Good morning to everyone and UN Global Compact. Thank you so much for this amazing opportunity to be part of this important conversation. So for us at CBG, the subject commercial green underwriting is very, very key to us. And we are very excited to be part of it. And so because of that, I have my team here. I have Felicia Ampofo, I have Priscilla, I have Pearl and some other ones that have joined the call. They are listening. When it comes to the Q&A session, they would also come on board. So Isaac spoke about the demand side, and we've realized that over the period, the conversation has always been on the demand side, and little is said about the supply side. And that is why this conversation is very key so that we consume. I've always said that wherever there are risks, there are also opportunity, and it's important that we align well to be able to, whilst we are considering the risk element, we are also tapping into the opportunities, and that exists. Today's subject is on commercial green underwriting. In simple terms, this is how a bank evaluates a green or sustainability related project before deciding whether and how to finance the project. Now, a project being environmentally beneficial is important. We all know about it because that's the environment in which you operate, and you want to ensure that you're not doing things that negatively impact on the environment. But that alone does not make it bankable, like Isaac mentioned. A project must always have a viable business model because we are in business, and as a bank, we are managing public funds, and at the end of the tenure, they're going to ask you for some benefit on it, some profit on it. And so it must make the project must always have a viable business model, credible sponsors, manageable risks, and ability to repay. Once we have looked at all these things, then we can see that this is a viable project. And so this is where commercial green underwriting and diligence become very critical to the business. So before we talk about the underwriting, we want to understand why this conversation matters. Why is it important? Now, it's important because sustainability expectations are changing. The way businesses compete, and the way we lend to our customers. The narrative is not the same again. International buyers and investors now look beyond price and quality. They may also ask very legitimate questions about traceability, labor conditions, either to these are areas that you do not pay much attention, environmental compliance, and how you are even reducing your emissions. Now today, as a bank, we are expected to understand how these issues could affect a borrower's ability to operate and repay. And you ask yourself, me, I'm a banker. I don't work at EPA. I don't work with Isaac. How am I able to relate and understand some of these things? And we'll talk about that conversation very soon. A company may be profitable today, but poor environmental practice, unsafe working conditions, or exposure to flooding can create significant future losses. And again, this matters because it's important that we prepare ourselves adequately. A business with reliable information, the necessary permits, and clear policies is easier to assess. This can reduce or avoid unnecessary delays because the market's narrative, like I said earlier on, have changed. And so it's important that we put our businesses, or as business entity, we are in a state of readiness to be able to tap into these emerging opportunities. So what banks look for now as a bank, if you come to consolidated bank, what are we looking at? Like I said, our traditional, yes, the narrative have changed, but this does not replace the credit assessment the traditional credit assessment that either two would do. We still have to ensure that the business is very viable. We need to look at the cash flows. We'll still take our collateral regardless and our security. And then we are looking at the quality of management that we have. On the environmental side, yes, we are looking at this thing, but it's also important that because of the emerging market that we find ourselves in, we also consider the environmental side. And BOG, in a way, is enforcing this directive on us. But it's not just enforcing it. As a bank, as an institution, you also operate within a certain environment, and you want to ensure that you do not negatively impact on the environment. So yes, the traditional assessment procedures still exist like we've been doing, but we also consider resource use. How are we reducing our emission? Our activities or that of our clients, is it polluting the environment? Waste and the effects on biodiversity, and so on and so forth. So on the social side too, would also consider employees' safety, labor practices, and community impact. I'll deep dive into it and talk more about it. The governance cover oversight policies, transparency, and ethical conduct, So combining these factors with traditional credit analysis like we've been doing every now and then helps us to understand whether the business will remain viable over the full life of the financing period. So, like I said, I will deep dive into it. So practical ESG due diligence. what does the ESG due diligence look like in practice? When you come to CBG, how does it look like? It involves examining the issues that are material to the particular business, and it is on case-by-case basis. For manufacturing company, Isaac touched on it. We may focus on your permits. We'll look at your waste disposal. We'll also consider energy use and employee safety. Now, for an agricultural business, we'll be looking at water availability or water usage, the land use, labor practices, and climate resilience, if possible. So we will look at all these areas. We will also look for evidence that it is not enough to say the company treats everyone fairly, but it must be properly documented. Do you have policies and procedures in place that support the claim that you are making? Do you have records in place? Do you have the required license? So we will require all these documents and verify to support the claim that you are making before we conclude that you are ensuring compliance. So we just don't ask you for it, but would also require that you give us some form of documentation to support what you are saying. Now, the purpose is not simply to find reason to reject an application. That is not it. It is to identify risks early and determine whether they can be managed or if we can put some action plan in place to walk you through the journey. For all you know, you do not have the technical skill or you do not have the capacity to do it. And so, yes, we ask you for the requirements, but we do not leave you like that. We'll put some action in place and see how we support you through this journey. Now, what make a green project bankable? We've seen a lot of people walk into the corridors of the bank or the banking halls, and then they tell you that, oh, I have this green project, I have this, I have that. And then you ask very key or relevant questions, and all that due diligence has not been done. And so today we are going to discuss what makes a green project bankable. Now, it's good to have an idea, or to have a very nice green project. But what problem is this project resolving? Or what problem does the project solve? And is there genuine demand for it? We as a bank, we have to examine and check whether you have conducted some feasibility study on it. Can it be built and operated as proposed? Is there some technology available? Are there necessary permits and suppliers available? Do you even have off-takers? We also look at the financial model. We want to do the financial analysis, look at the various NPVs, the cash flows, and see if it makes business sense. We look at the bottom line. Is it something that is going to impact positively on the bottom line? And so, in a nutshell, the financial model must demonstrate expected revenue, cost, cash flows, and repayment capacity. Then the claim environment benefits must also be clear and very measurable. So the project must have that supporting ESG documents. You must also have a contract in place. We should see the approvals and the risk management arrangements. Now, I'm saying all these things not to push clients away, but to tell you the things that we look out for. And like I said earlier on, even if you do not have them in place, there are ways that we can hold your hands and walk you through the journey and ensure that you have all these things in place to make the project very bankable. Now, the key message here is that a bank does not finance an environmental benefit in isolation. It finances a commercially sound project that produces an environmental benefit and can repay the finances or has the ability to repay. Because like I said earlier on, even if we go to the DFIs for funding, these funds belong to the public, and the expectation is that we should have projects in place that has the ability to repay. So we are doing this because we are regulated by the Bank of Ghana directive. But just last month, the Ghana Sustainable Finance Roadmap was launched to create a more coordinated approach to sustainability across banking, insurance, and pension and capital markets. But as a bank, we are like 2 steps ahead of what was the directive that was issued, and it looks like we are well aligned with the roadmap that was shared by Bank of Ghana. It has 3 central pillars. The first one is on integration, and this was done 3 to 4 years ago when we started the sustainability journey, incorporating environmental, social, and governance issues into financial decision. And so today, if you walk into CBG, you realize that we've integrated the ESG considerations into our lending framework. And so we'll ask you all the relevant questions that are connected to the ESG factors, and be sure that you are protecting your environment before we lend to you. Now, the second phase of the roadmap talks about the climate-related risk management, understanding and managing both physical and transition risks. And so, same here today, if you come to CBG, we have a transition plan in place just to ensure that we understand the environment in which we are in and the risks that are associated with it. Even in terms of our emission, how much are we reducing in terms of our emission? Everything is stated in the transition plan. Now, the third phase of this roadmap is talking about financing sustainability. Now, it says that you have integrated the ESG considerations, you have spoken about the risks, the climate-related risk management issues. Now, it is time for you to tap into the emerging opportunities. How do you mobilize funds or capital for sustainable development, infrastructure resilience, and the energy transition? And this is what we are currently doing. So we actually, at the moment, we are at the third phase of this roadmap. And this journey, the third phase started last year. So we have KPMG on board who has helped us advance this journey, and then very soon we'll outdoor it to the general public. So for us, these pillars have practical consequences. They affect governance and strategy, credit underwriting, risk management, disclosure, and development of sustainable finance solution. This means that the ESG question discussed today are not merely individual banks' preference. They form part of Ghana's wider direction for building a more resilient system. What can a business do now? As a business, for all the things that I have said, what are you expected to do? Now, it starts by assessing the environment. Look within your environment, social and governance issues most relevant to your activities. And so things that are relevant to us as a bank, a manufacturing company, it probably might not be that relevant to that manufacturing company. Do not begin with every possible ESG indicator because, like I'm saying, depending on your materiality assessment test or what you feel is material to you, it might not, I might start on a different direction, you might start from a different direction, but the most important thing is to start assessing your environment. Begin with the risks that could materiality affect your business. And you also want to, so after assessing, you're looking at your data collection management. And for you to make a very good statement of your journey or to assess your performance and see whether you're doing well or not, it's important to collect these data to inform your baseline or to give your baseline information. This may include energy usage, water consumption, water safety incidents, workforce information. Credible data is more useful than, the broad commitments. And so, yes, you have the commitment to drive sustainability, you have the commitment to reduce your emission, but it's important to know where you are currently so that you can build on it. Now, it also makes the conversation very exciting and informative to interested parties. So that is the reason why you need to establish your baseline. Where are you in terms of your emission? When it comes to waste management, where are you? When it comes to energy usage, where are you? Baseline is very key. And in this country, sometimes data is very expensive. And so for you to do it, AGI is there. We also engage EPA to assist us. Most of these universities also they have the capacity to assist you, but the most important thing is that you need to know where you're starting the journey from. Now, you also need to establish clear responsibility. So strengthen your governance is not just by word or saying it. Now, at a bank, if you come to CBG today, board, we have a champion on the board, and the ESG discussions, the tone has been set right from the board to the executive before it trickles down to other team members. And so we have a champion that is driving it at the board. We've done quite a number of trainings to set the tone right, both at the board level and then the executive level. It tells you the level of commitment that we have as a bank to drive sustainability. Now, the other one I want to talk about is on documentation. How do we ensure that we have the right documents in place? How do we maintain proper records on our employee safety and proper records on our labor practices and the community engagement that we are doing? Most of the time when you're having CSR initiative, you do the engagement, but do you keep records of such engagements? And in most cases, we do not do that. So it's important that we maintain proper records of all these things that we are driving. And then the last thing I want to speak about is, and it's important, you have the idea, but it's important to engage the banks on time. So engage the bank early. Early discussion can help the business understand what information will be needed. and it will also help us to identify an appropriate financial structure for you. If you go back and check the things that we discuss on making a project bankable, it tells you that it goes through a rigorous process. And so it's important that you do not stay back and wait until you feel the time is right before you engage the bank. Get to any of our branches, speak to us, share your ideas with us, and let's have this discussion on time. Now, beyond all the things that we have said, it's important to have that stronger partnership. You need to build a very strong relationship with your stakeholders. How are you collaborating with your stakeholders? And now, to say this, there's no institution that can deliver the sustainable finance transition alone. Now, I want to repeat this. There's no institution that can deliver sustainable financing, the sustainable finance transition alone. We do not work in isolation. I mentioned that I am a banker. There's somebody who sits in APA who has the capacity, AGI who has the capacity. What Isaac is driving, I might not have the technical skills to be able to do that. And so it's important to form that partnership and collaborate with all stakeholders to ensure that they all bring their capacity or their expertise on board to be able to drive the sustainability agenda. For businesses, they will bring the project idea and operational knowledge. Now, as a bank, we'll provide financial assessments and structuring and capital. Now, development partners, if we don't have all the funds and even we want to blend it, we'll get development partners to provide technical assistance, concessionary funding, and then guarantee to de-risk it. Or blended finance, so blended finance can be particularly useful where a project has a strong development benefit, but its risks or financing cost may purely be commercial funding difficulties. Guarantees can reduce part of this lending risk. Technical assistance can also help a business to complete the studies. And then improve ESG system would also prepare you adequately enough in terms of your documentation. So now the objective is simple: to be able to combine these different contributions to build stronger projects and mobilize private capital. Partner support does not remove the need for commercial viability. It rather presents a sound project preparation, and it will be able to for you to attract international funders. We need to collaborate as a team. Now, some key takeaway from all these discussions that we've had today. So for starters, ESG is becoming part of standard business practices. Bankability starts with preparation. So bankability does not start when the idea is in your head or you have the idea, but you haven't been able to approach anybody. It starts with the preparation. Preparation, a lot goes into the preparation. Credible information and good governance. Environmental benefits must be supported by a viable model. And for us as a bank, we should for us as a bank, we are here to partner with you. We are here to hold your hands through the journey. We are here to help you understand the requirements and prepare you adequately enough to be able to identify appropriate financing structure. Now, for a business, you need to start collecting your data. You need to address the risk elements that are associated with it. And again, you also need to engage the banks and other funding partners that can help you raise some funds to support the project or the idea that you have. And so for you to better position yourself to tap into the emerging opportunities that I mentioned, it's important that you start now. It's important to start now. So if you're a client, you're a business who is listening to me today, it's important to start the conversation now to adequately prepare yourself and position yourself to assess the emerging opportunities that exist. Now, I want to leave you with one thought. Banks don't just finance the economy, but we shape it. Every lending decision that we make today influences the economy we will have tomorrow. Now, I want to repeat it again. Banks don't just finance the economy, but we shape it. Every lending decision we make today influences the economy we will have tomorrow. If we strengthen our underwriting with climate and sustainability consideration, we are not only protecting our balance sheet, not for the bank alone, but we are helping build a more resilient and competitive economy. I am so grateful for this opportunity, and we look forward to working with businesses and partners to develop projects that are commercially sound, environmentally responsible, and capable of creating long-term value for Ghana. Thank you so much.
Thank you so much, Eva, for demystifying commercial green underwriting and showing us that ESG integration is not just a barrier to capital, but the very key to unlocking faster, cheaper, and more resilient growth for Ghanaian businesses. So we'll move straight into our Q&A session. I can see some questions in the chat. Eva, you can stop sharing.
Okay, Debbie, I'm done. Thank you.
So our first question from Manuel to Isaac. So he says, you highlighted that technical readiness and investment grade assessments are necessary before approaching banks. Beyond connecting businesses to financial institutions, does the AGI Energy Service Center assist in structuring de-risking mechanisms, such as guarantees or concessionary rates with local banks to ensure these projects actually get funded once technically ready?
Thank you, Rhoda. Thank you, Manuel, for the question. The simple answer is no, we do not directly support in terms of de-risking mechanisms. We don't provide guarantees at the center. Our work is mostly at the technical side, trying to get the businesses to be ready with the bankable project. When it comes to issues around the structuring, concessionary rates, structuring of the loan guarantees and all of that is outside of our purview. However, at the bigger AGI level, that is the Association of Ghana Industries, and you know that Association of Ghana Industries is mainly into policy advocacy. So one of the things they take up also has to do with the cost of capital and how to engage various stakeholders in terms of structuring of capital. So AGI does that advocacy. They don't directly do that, but they try to have that dialogue with Ghana Association of Banks and the other stakeholders in the market. So that's a simple answer to it. Thank you.
Thank you, Isaac. I believe we can take the next question. I see here that Daniel actually answered the question. Okay, so the next question.
Daniel Susan is my technical colleague. He has answered most of the questions.
Okay. So Nanaya, can you take note of Daniel's answer to your question? We will move on to the next one, which I see Daniel also answered that. Okay. We have a question from Gubash, which is, how is the cost determined? Is it fixed or variable? Gubash, can you provide more context? Or Isaac, can you take this question?
Yes, I think the question was in relation to the Bisa Connect support service.
Okay.
The 60%. Gubash, correct me if I'm wrong. It has to do with that, right? Yes. So you just said it.
Yeah.
Yeah. So typically we have depending on the size of the business, the operations and all of that, it influences the number of days that we use in undertaking the feasibility assessment and the technical advice and all of that. So it has a direct correlation with the size of the business and the operations. Typically for solar feasibility for an SME in Ghana ranges between 4 to 6 days max for SME. For large industries, we go into around 10 consultant days, not 24-hour days, like consultant days. We typically will translate into around 35, 40,000, and then we give the 60% discount of that. So some of the businesses are paying as low as 7,000 for this feasibility support. Yeah.
Thank you, Isaac. We'll move on to the next question. I see a question from Martin Amwakwa. I believe this is for Eva. So it says on slide 5, you outlined a path to bankability, moving from a business idea to ESG documentation and investment readiness. For mid-sized businesses with limited dedicated ESG teams, what basic level of documentation or data collection is enough to begin engaging CBG early without getting overwhelmed? Over to you, Eva.
Okay. Yes, thank you so much. So I think I spoke about the bankability of the project. So basically, we are looking at the financials. Does it really make business sense when you look at the bottom line? And then we are also looking at your environment, the environment in which you operate within. Do you have the necessary license? Do you have permits? And even if you have it, there are some that are renewable. So have you done the various, have you renewed it? And so if they want to deep dive and get more information, they can kindly reach out to us or walk into any of our branch. But it's case by case basis. And I mentioned that it depends on the environment in which you operate or the industry in which you operate. And so for a typical manufacturing company, the way we are going to treat you and and the various documentation that we will require from you is going to be entirely different from an agriculture or a service industry. So please reach out to any of us or our branches, and then we can zoom in into the specific area that you want to get. Thank you.
Much, Eva. We will take the next question from Julia. So it says, slide 8 highlights collaboration through blended finance, concessionary capital, and risk sharing. Which specific sectors in Ghana is CBG prioritizing right now for these DRICS green credit lines? Over to you, Eva.
Okay, so thank you very much. Like I said earlier on, we are going through a transition, and if you look at the roadmap that I shared, I told you that we've done the pillar 1 and 2. We are now at pillar 3. That notwithstanding, we've done our materiality assessments. So basically, as a bank, we are an SME bank, and so the focus when it comes to certain areas, there's a lot. When you talk about the SME space, it's very, very huge. And if you're not doing, your focus is not on corporate projects, and you are looking at the SME space, you realize that you need to cast your net very wide. And so that conversation we'll probably need to put on hold for today. But if anything relating to agriculture, anything relating to renewable energy, come to us, and then we'll assist you. But beyond that, I might have to hold on, and then we'll get back to you. Thank you.
So Julia, you can reach out directly to Eva for more on this particular topic. Moving to a question from Gubash. Yes, he said, is there a limit to the amount you can finance? He has a number of questions. So is there a limit to the amount you can finance? What is the payback tenor? What interest rates are we looking at? And is there a moratorium period?
I like the question. So it's case by case basis. So the tenor depends on the idea and the bankability of the project. Even as a bank, anytime we reach out to DFIs or funding partners, when it comes to the sustainability space, it is not too generic like the normal projects or it's not generic like the way we treat the normal projects. And so in terms of pricing and payback, yes, the tenor is not going to be like the normal tenor that we have, but of course would extend it. Just reach out to us, and then we can talk about it. But anything beyond 3 years, we'll look into it. Now, the pricing model, it depends on the project. So we can't talk about the pricing for now. If you have anything relating to the renewable energy space, agriculture, like I mentioned, and then when it comes to the social side too, we are heavy on the women initiative. So if you have any projects that relate to gender or advancing the women discussion, just reach out to us and let's have that conversation. But it's case by case basis. Thank you.
Before we proceed, do we have any additional questions? You can either put them in the chat or raise your hand and unmute. In the absence of any additional questions, I would like to thank our distinguished speakers, Eva Kweku from the Consolidated Bank Ghana, Isaac Batini from the Association of Ghana Industries Energy Service Center, for your rich perspectives that you shared with us this morning. I believe we have learned a thing or two and are ready to take our search for green capital to the next level. As we look ahead, we want to ensure that today's dialogue transitions into actionable strategies that companies can actually move forward. We would be sharing more information about our upcoming summit in August. So look out for the registration link. We have your details. We will share them with you so that you can join us. Some of you have already indicated your interest for the B2B and the exhibitions. We will be reaching out to you individually for some more detailed information on how you can participate, ensuring that we meet your needs and then the needs of our supply side as well. We will be sharing the slides and the recording so you can peruse them or even share them with other participants as well. Before we go, my communication colleague is telling me that it's good if we can all put on our cameras and then take a screenshot, just to show that indeed we were here today. So kindly indulge us, put on your camera and then let's take a shot before we leave. Okay, so let me stop sharing. Yes. Okay. Yeah. So you can let us know when you're ready.
Rhoda, I'm so sorry. I think I'm having the same challenges. I might have to get out and then rejoin again. Thank you.
Understandable, Eva. Yeah, I can see Daniel, Isaac. Okay, so are you ready? Okay.
Cheers.
Thank you so much, everyone, for joining. Enjoy the rest of your day. Bye.
Bye-bye. Thank you.